Ladies and gentlemen of the crypto space, we're live on a Friday, September 6th at 11:36 a.m. All right, we started September. We know where things are heading with regard to social media and what people are talking about regarding rate cuts. It's coming 25, 50. All right. And we clearly understand based on all our conversations that that's a very defensive posture. They always state that they are offensive or but they're responding to market conditions. And the market conditions are not expressed in their dialogue, federal regulators, Federal Reserve specifically. But this data and our position, our situation with markets is unprecedented, literally in the history of crypto markets. We never had an inversion of the yield curve occur in crypto markets. Period. Let me last time we're looking at anything even remotely comparable is great historical time periods during economic catastrophes. Now, obviously, it's similar in that regard. It's it's different in many regards. It's always similar and always different. So it's different in that you actually have a crypto market. This time there's an uninversion. And what is the implication of that? There's no precedent. We have no idea. There's no way to know. Because as we always state, crypto is not a US market, it's a global market, accessible to all markets, but of no market. So that has a bit of a different consideration, and that places the entirety of the crypto space in the speculative bucket. Much as we talk about our individual investments, all of crypto is inherently in that speculative bucket of we have no idea what the hell is going to play out. Now, from not considering like yield curve uninversion and the whole recession conversation, everything looks very interesting. We're on the verge of the primary conditions that lead to crypto market outperformance. So I guess maybe the argument is crypto market outperformance amidst a backdrop of is there going to be like a significant fracture in global economics and global capital flows? There's no way to know. But that's the path. The path is always uncertain. The destination still pretty clear. I still don't think any of these points we're making right now alter the destination in that debt needs to be refinanced. Global liquidity needs to increase from a total circulating currency supply standpoint. All foreign currency denominations, especially the United States dollar, but those numbers go up. Therefore, nominal prices go up. So I guess the question really is, and what I see as the destination is the numbers go up in what? So most broadly, I see a big structural change in the system, and that's what's expressed in the 10-year, not on the weekly. You go out to the 10 month, the 12 month, the yearly, and that structure has significantly changed. Now, obviously, rates are coming down, and that means bond prices getting bid, particularly an inversion of the tens and twos, as you can see clearly here. 3685 finally on the 10-year is a bit higher than 3675 on the 2-year. So that means banks, especially as rates come down on the short end, but they would need to come down significantly on the short end. Isn't that wild what the bond market says Fed policy needs to be? So for banks to be profitable, commercial banks with regard to lending, particularly deposits, is borrow short, lend long, and they're borrowing deposits and they're lending it long on the 10 plus year treasuries. The rates need to be less than the long end of the curve, and that's real inversion. It's not just tens and twos. It's tens, 20s, and 30s, and 3 months, 1 month, short duration, the bills and the notes. So things are not that's clearly not the case currently. Fed policy hasn't moved at all yet. Yet the long end is at three and change, 3.6 and change, and interest rate. So something is still quite out of whack there. So once that uninverts, let's say the whole short end versus the whole long end, what occurs? And there's no precedent for that. But broadly, the way I think about it is some shit goes down. some structural change in the system. And that at least gives me comfort. Comfort and my mind is certainly on the fact that all in austerity, clearly all our quote unquote bags have just bled away to basically not nothing, but significantly collapsed as compared to what markets in 2021 produced. So we're all dealing with the same burden of financial contraction and slowing economic activity. Um, but I have that comfort that the destination's still quite clear to me. So as much as the austerity is not desirable, you still have to be grateful that we can still manage. And that's the most important thing that we talk about on this channel. But we talk a lot about markets and investing. But the most important thing is like what's the Ramsey's? What's his Dave Ramsey's? Just balance the budget, and that's like just very generic financial advice. Is take care of the budget, and but to take care of the budget, you really need to take care of your own emotional state, self health, well being. You need that mental fortitude and strength to be able to manage budget and live within means. And as we see in economic data, that's clearly not the case for the majority of America, probably around the world as well. And that's unfortunate. So on this day where markets are red, yeah, and there's uncertainty in the short term, and still quite great deal of confidence in the long term, I still would like to remind folks the most important thing is to get your head right, is to have uh, a robust comprehension, a rigorous methodology, a capacity to be calm in in a time of uncertainty and complexity, and that's always lacking in society. That's why there's conflict, and that's why there's debates that get heated or geopolitical conflict, and that's unfortunate. We see that it's so prevalent in this polarization of our nation and the right and the left. I mean, you'd be surprised if there was actually a rational conversation. Everyone overlaps in some opinions. It's just that it's so polarized, people can't converse about them. So that's a shame. And it's really coming to a head with obviously the election, but the election doesn't mean much. So the economy requires particular decisions to be made that are completely independent of who's running things. But that's just a strange statement to me nowadays. Who's running things? The system runs things. And what is the system? The system is made up of countless components. So this is really what is the system? The system is a manifestation of endless chaos. And the chaos, when you score everything up, when you aggregate all the data points and all the activity, produces the system that we see. And these charts that we look at are an expression of that system. This is an aggregate data set that's a manifestation of all behavior, all financial activity, which is ultimately a manifestation of domestic and international, domestic political, international geopolitical complexities, trade, personal financial decisions, personal um, financial management, wellness, and that's why things are just very uncomfortable. That's unfortunate. Not much we as individuals can do about it, but the least I can do is talk about it in a clear, unambiguous, and like bullet pointed, delineated way where we break it down because you can't understand anything unless you break it down to its fundamental components. Bullet points make a big difference. Anyhow, so where are we at with markets? DXY flirting with less than 101. For the fun of it, what I've been doing lately is this 200. This 200 on the weekly DXY is very interesting. And absent like some sort of economic complexity with yield curve on inversion, something significantly breaking. This is your basically your crypto bull market resistance level, uninverted or inverted rather, breaks up here, flow of the system changes. So what does that mean? That means foreign currencies are strengthening. Now the whole question is, how are foreign currencies strengthening and is it sustainable? It's clearly not sustainable. With the primary mechanism being shorting the dollar, which is basically leveraging collateral to short the dollar. And foreign currencies do that. Why? To strengthen their currency. Now, how sustainable is that? It's leverage, so they need to finance it. Unless the US is actually financing it with swap lines at a 0% interest rate or a relatively nominal interest rate, which is another potentiality. Um, but above this type of level, this bull market resistance level, um, foreign currencies are significantly stronger, which implies significantly more purchasing power in foreign currencies, increasing purchasing power relative to the dollar. And that changes the whole world order when that occurs. I mean, as you can see here, here's your bull markets in crypto. I mean, 2000, October 2017, I mean, really started in 16, but look, December 2016, boom, 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 boom. And you had multiple legs, same thing in 20, boom, 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 which ended in June of 21. Bull market resistance level. But this also implies a significant change in the decision-making process of what to invest in the United States. The purchasing power is increasing outside of the United States. That's going to significantly impact the domestic actors' capacity to import goods and services because it's literally becoming more expensive. The dollar's getting weaker, and they have to buy goods and services priced in foreign currencies, and those currencies are getting stronger. So it takes more dollars to buy same price goods and services. So this plays into also consumer price inflation as well. And then, what I always come back to with regard to dollar weakening, there's also the unspoken responsibility of the US to export dollars for the system to continue to work. So for this system, and what is this system? This basically means normalcy. You wake up, you go to work, you go to a supermarket, it's filled with goods, you go to a Best Buy, it's filled with technology, and you come home, eat dinner, kids go to school, relax, everything's calm, TV programming is normal. Normalcy, that's the system, normalcy. For this system to continue, the dollar can't be as strong as it is considering what has occurred internationally over the last couple of years, particularly with regard to international debt levels, dollar denominated debt levels. US needs to increase the purchasing power of foreign currencies as a policy. And foreign countries, foreign central banks almost assuredly are coordinating to that end to weaken the dollar. And that changes the entire global order with regard to trade and manufacturing. Look at all the globalization efforts and the exportation of U.S. manufacturing to Asia, Southeast Asia, so on and so forth. That equation is completely changed in a lower high, lower low dollar environment. If the secular trend changes, so we're looking at it on the weekly, but if you zoom out, these this is the inverted curve of what we have looked at a lot lately. But here's your secular trends. I mean, literally top 92, bottom 2001. You're talking 9 years, and then bottom 2002, top in '08 is 6 years. So 2008 to 22, 24 years, 14 years. Sorry, 14 years. So these are secular trends where the structure of the system completely changes. And that's really what we're on the precipice of, or precipice, negative overtone. That's really what we're on the threshold of, because that is literally what has played out cyclically, historically. And this chart literally shows it down, up, down, up, down, up. It's the inversion. It's basically the same story in the uninverted version. The cyclicality is there, and there's reasons for the cyclicality. It has to do with the maintenance and continuity of the system, that normalcy that we just talked about. Very meaningful. Because I think we're gonna flip to a dollar weakening secular trend, and that changes that normalcy into something else. You're on YouTube or X, post some comments. More than happy to help you guys out navigate this relatively treacherous path leading into a good destination for international crypto markets. It's not a US market. Um, and I say that with hesitation because I feel empathy. I empathize with the uneducated that are deployed heavily to overinflated equities because that doesn't last. And why do you think Buffett's doing what he's doing? Why do you think he's rotating capital from sector to sector? He's The whole system is going to structurally mutate to accommodate the change in flow of capital based on relative currency pricing. So relative currency pricing and relative interest rates literally drive all capital flow on the planet. Just makes sense. You can think about it from like a fluid dynamics system, or even an electrical system with voltage drops and resistance that creates a current. So same thing. As the values of currencies change over time, the relative value is what creates currency flows, electrical flows, so to speak. Tapsy, what's up, Friday enjoyers? Always a pleasure. Always a pleasure. Arrow, good morning. Can you please talk more about differences, similarities between 2019, 2020, and now in terms of macro and where we are in the cycle? Okay, 2019, it was over. It was dead. We're coming off 16 and 17 with insane ICO activity, which is akin to tokens nowadays. Just basically tokens that were just bullshit that have no significant financial uh, purpose. And I mean, technically, they were more so capital raises back then, 16, 17, where there was like, oh, we're going to build this. Nothing ever got built. There was a couple of things that got built, but basically nothing. At least nowadays with meme tokens, no one expects them to do shit except literally just bullshit on social media and just offer no functionality. And we're a bit saturated with functionality at this point, you think, from a base infrastructure perspective. How many Aave forks do you need? And we saw that really play out in 2021, where they're all dead. And Aave is still Aave, which is basically doing incredibly well from a price point standpoint. What a strong chart. Mind the horrible drawing. That's a lovely chart, in my opinion. Volatile, but lovely. So 2019, there was a lot of building. Back then, it was Lend before Aave. It was Bancor. That was insanely hot at 20 and 21, and until the market realized it wasn't as sustainable of a model as they expected. And that was the market in 22 and 23. It's designed to create austerity and test every system to its breaking point and figure out what can survive, what is meant to survive, and that's a culling. That's what a recession is designed to do. It's the curing of malinvestment. What was a good investment and what is a bad investment is determined. So 2019 sentiment was just as bad. So there's something notable. Am I going to say it? Yeah, uninverted. So look at the drawdowns, or rather peak to intersection with the 200 on the weekly. 349 days, 105 days, and 707 days. This is the longest crypto market drawdown in its history. Taken 707 days to finally start to interact with the weekly 200. Took 105 back in 2020, and it took 349 back in 2017. Below here results in significant capital flow changes, as we just discussed. So compared to 2019, it was a much quicker series of events. Folks need to understand that the banking system failed in September of 2019. The talked about, but not talked about enough, repo meltdown, where banks stopped lending to one another. They were afraid they didn't have the capital or whatever. The interest rates in the repo market blew up, and that's when the Fed just really jumped in and started becoming the lender of last resort for interbank financing. And then the reverse repo just blew up with the excess capital in 2020. And um, what's the DTCC came online recently, 2023, 2024. It's probably not executing until whenever. I'd have to look it up. But basically, between the SEC and the Fed, they've taken control, or in their own mind, the way they could possibly know how, of interest rates and collateral or debt clearing, the settlement of U.S. debt instruments. And that is all intent on a single purpose: volatility suppression. Same thing with Treasury buybacks, which is QE. They're easing the liquidity issues in the Treasury market by reconstituting uh, critical components of the yield curve. Either clearly they're becoming a bidder when there's a lot of sell pressure, and they're basically interjecting into particular tenor pricing affecting interest rates. So this all started really in like 2019. I mean, it was weird between 2008 and 2019, but it got weird in 2019. And then post 2020, what they did in 2020, insane, insane. So we're in uncharted territory with regard to government intervention, government perversion, government thinking that they could manage everything and not let the system, not build the system that's self sustaining, that can manage itself. Maybe it's just general consensus that the system has grown beyond control, and if they don't do what they do, the party's over. That may be the case, but that's very unfortunate. You would think that, we talk about like DAOs and autonomous, self-correcting systems. We would hope that that was the case for our global economics, but that literally isn't the case. I very clearly and explicitly stated this is a managed financial construct by all the central banks, a coordinated effort, an effort of global geopolitical collusion in order to maintain the function or the continued functionality of the system. Uncharted territory in that regard. 2019, 2020 compared to today, sentiment compares. Sentiment, but it's not the same situation. Similar yet different. Sentiment was in the dumps. I'm on social media posting commentary. It's dead. There's no one. People are barely covering the consumer price inflation, paying bills. The austerity reigns supreme, and people are frustrated and they've given up. And that's why the interactions on social media are what they are. They've collapsed. Only the few are still participating that see a destination through this incredibly treacherous path. That was 2019. That's exactly what it was. It was dead. It was gone. It was history. It has been. Something happened in the crypto market and it's over. And then obviously in 2020, you had your collapse, which resulted in liquidity infusion. So it's going to be interesting to see if we have a significant dollar downturn below the weekly 200, because this was July 2020. In my mind, it's really what did it take to get the dollar? Okay, here's March. So March, everything was blowing up, quote unquote, blowing up. Yeah, the dollar was blowing up. Look at that dollar. That was March of 2020, got us to 102, and the system was fracturing. And they needed to throw capital everywhere with the stimmies. And that was such a popular topic. Dollar at 102. And then they finally smushed it down in July of 2020 to the critical threshold. And then everything did well until 21. And here's your double top in Bitcoin right there. And then everything collapsed end of 21. So this is a bit of a forward-looking indicator in that regard. You got to cross inspect with move indicator, and then you could get a little bit of a sense what's leading and what's lagging from an indicator perspective. And there's your basically bottom. Q3, end of Q3, Q4 2022, and Bitcoin rallied from 15 and change to wherever the hell it was in January of 23. Came off the floor significantly because global liquidity increased as foreign currency purchasing power went through the roof. This is one of the largest, fastest declines in the value of the dollar in a long time. I mean, probably literally, well, it's all of them. All of them are significant, uh, you know, e- rapid, expeditious decline in the value of the dollar once it gets to that critical threshold because shit's breaking. I'm pretty sure this topped October of 22. When was, you know, the British gilt crisis? Might have been around there, blew everything up. And they went back on QE real quick. Anywho, history rhymes, doesn't repeat. You smell the similarity, but we clearly know the difference. The biggest difference. Look at the infrastructure we have today compared to what we had in 2019. There was nothing in 2019. It was a $500,000 on Uniswap V1 in Q4 2019. There was no activity. There was no financial activity. There wasn't the concept of financial activity. It wasn't even on the radar. I remember the launch of Uniswap V1. It was a what is this type of thing? What are they doing? What are they building? And frankly, Bancor had it earlier. Concept of, you know, AMM or some sort of like means of exchange, not through a centralized exchange. And that was just a very exotic concept prior to Q4 2019. Concept of exchanging things peer to peer, not on Coinbase. It's weird. And then post 2020, people started to see what the hell it all meant. Liquidity went through the roof, capital inflows, and we didn't have any infrastructure in Q1 2020. The shit got really hot, obviously, in 2020 DeFi summer. So it was about Q2, Q3, things started coming online. But as compared to now, oh my God, like that's the takeaway. That's a good part. What gives me such comfort to just, deal with the austerity. I'm like, paying the bills helps. It's nice. Thank you. But man, it's painful to watch the valuations do what they're doing. But that's the similar this time. Exactly what it was like in 2019. Good parts of 2018 as well. But 2019 compared to 2024 infrastructure. Oh my God. Oh my goodness. I mean, we literally just need to go to the stablecoin chart. There's not, you can't even compare it. It's an alien universe where we're at. $170.62 billion, obviously a good part on Tron. Let's just say mainnet 82.73, which has the vast majority of capital. Top it all off, volume, the concept of volume, on-chain volume, with on-chain exchange volume exceeding centralized exchange volume. That's the world we live in now. We're on chain. The financial activity is greater than what was the biggest crypto exchanges in the world. That's no longer the case. That's changed. That's different this time. Things are similar. Things will repeat, and countless things are different. That's just what it is. So, $3.847 billion in daily financial activity with a 20% decline. Oh my God. We could never have imagined these numbers. I remember the first like $1 million exchanged on Curve. Everyone was going wild, and then it ballooned to 10 mil in like a week, and it was like, what the hell is going on? And that was just no one saw that coming. Nobody. And that's more or less probably the sentiment that we're heading into. Nobody sees what's coming. You can't. I don't. I see what's coming from a destination perspective, but that basically means, all right, stuff in this space is probably going to do well in the long term. Path is volatile from a macro perspective, but we have no idea what's going to play out. with these businesses? Are these businesses on significant radar of large institutions that are ready to throw around a half $500 billion to do something incredible? You have no idea. So that's what it takes, and that's what starts markets. That's what starts capital flows. A large actor saying, yeah, this is insane that no one's seeing this." It's kind of like a margin call. You're not panicking if you're the first out the door. You're not degenerate if you're the first person to engage in a massive financial opportunity. If you're a bank and you're like, this is the future and we're going to make this the future, kind of changes everything. So these are the types of things that are catalysts, but you don't want to respond to the catalyst. You just want to be there. Just want to be in markets. This is the exposure. And then those things, they happen. You're like, yeah, we talked about that. That was a possibility to occur. What's the possibility of that occurring in equity markets? It's zero. Zero. There's no nascent burgeoning technology in equity markets. ETFs are boring, ancient technology. Oh my God, it's not even a technology. This, no person, no human, no real estate, no developers, no OPEX, no CAPEX. This is different. The potential for these types of systems, these types of businesses, um, to surprise even the most down and out and skeptical person. I don't think that would be unreasonable. I think it's quite reasonable to expect some, dare I say, weird shit. So that's been my sentiment for quite some time. I've kept saying it's going to get weird. It's going to get weird. How is it not going to get weird? How is something like really significant not going to happen where it gets really weird? We, we've talked about the subtleties, the nuances, granularly what these businesses are, and it's insane. It's really insane. In the history of financials, nothing like this ever existed. And that's not even like an exuberant type of statement. That's like no people. I mean, every banker's a dick. Who likes financial advisors? Get rid of them. Let systems, objective, truly objective, impartial systems manage capital. Predictability, consistency. It's what this stuff is. And it changes the equation. So, anywho, hope that helps, Arrow. Hope that helps. Joel, good morning. Noah joined the Discord today. Thank you. Welcome. Lots of folks in there. It's quiet at times, but it's a hearty, hardened crew of folks that have seen things, been there, done that. Endless content over the last couple of years. Um, I know it's at a premium. What isn't at a premium nowadays? But you're welcome to ask anything in any of the channels. Not only myself being helpful, everyone in there is helpful. So everyone in there is trying to do the same thing. They're trying to figure out what the hell comes next. So it's a rare community, and that community has been condensed, distilled, maybe, over the last years into the few folks that have been able to manage capital and not get blown out of the water and that see the destination through the insanity of the path. And you know, that's as a teacher being proud of their students. That's kind of the sentiment that I have, and that's obviously the way I engage with markets. I'm proud of anyone that peers through the bullshit of social media and is able to see what is actually occurring and converse about it rationally and reasonably and discuss opportunities. And even though obviously everything is down and out, opportunities here, there is none anywhere else. There's nothing. And then we're not talking about work. Like we're not talking about capacity to like improve our skill set to get another job, a higher paying job. That's another conversation. We're talking about capital management. Like you've been in industry, let's say 10 years, you're 35 years old, you got a 401k. What the fuck is your 401k going to do for you when you're 60, 70, 80? Well, when you're 60, it's going to do nothing because you can't access it till retirement anyway. So it's literally doing nothing. It's worthless. The stupid 401k concept. And even the IRAs. You literally cannot access them until what? A certain age? That's insane. That's insane that they built that. Like, I've been seeing some social media content lately about people that are starting to realize, and this has always been the case, that the system is a contrived construct. It's built for us. It's like it's the Matrix, and the point being, everyone's told go to college and get a 401k and save for retirement. What the fuck is retirement? What the hell is retirement? Do you know the biggest cause of insanity and death is doing nothing? Is literally retiring. Sitting around and doing nothing. Retirement. That's insane. So I just wholeheartedly hate that word. Now you want your productive endeavors to be a little bit different when you're older. You want your maybe less physical, more mental. Still need to do physical to keep your body up, but you want to change as you get older, 60, 70, 80. But you have to keep going. That's the whole point of this human experiment, to be productive. And that productivity is what maintains sanity. So I don't believe in the word retirement. It's a dangerous word. And it's a bribe, like, oh, you got to save for retirement. Some magical, mystical retirement where you could sit back on a beach every day and be like, I'm fucking bored of the beach because I've been sitting on it every day. I need to do something with my life. When you're 70 or 80, yeah, you probably should have thought about that a long time ago. Um, Anywho, so you're all welcome to Discord. Anyone's welcome to join. I know it's at a premium, but there's good content and good people. And this certainly contributing to my austerity. It's not a large user base, but every bit helps cover the bills, and I'm grateful enough that I can at least cover the bills. I've been meaning to have a stream about purpose, about family. Isn't that the ultimate purpose? Why do we do what we do? And I like to remind folks the whole point of financial management isn't, oh, I want to make more money. What's the purpose? You can't have a means to an end without defining the end. The means isn't the end. Well, I got to have more money. Do what? You got to define it. The most important thing to be a good investor, a good manager of capital, is to actually define the things in life that require definition. You know, Interestingly enough, a bit of a digression. My mother was lost, a lost soul. And obviously, that's the case with a lot of kids. And purpose, meaning. What is the meaning of life? In the end, only you could define it. You got to make a choice. What do you want to do? What do you want to be? Yeah, maybe a little bit of arrogance. What do you want to be remembered as? And maybe the simplest one is I just want to be a good father. I want to do right by my family. And throw in a little bit of humbleness. That's enough for me. If that's the extent of the mark I can make on this world, is be a good father and take care of my wife and family. I'm happy. And then, oh, that's an interesting thought that I think about maybe more so as I get older. Like, what's the point? Oh, well, good. I chose a point. That's the point. Family. You choose it. It's a choice. So this comes back to maybe like what I talk about defining business rules. This is a business rule. What do you want to achieve? What is the point? define it. Sometimes it helps to write it down. If you have a rigorous, mental categorization capacity, you could just know it and remember it. But sometimes it helps to literally write things down to solidify an idea in your mind. Anywho, digression after digression. But at least these maybe are motivational thoughts, which is a good part of what I try and talk about. Sure, Joe, present. As soon as in the house. Morning, Noah. Having a good morning. Working. Yes, I got a bunch of coding to do and whatnot. And markets look like crap, but no, they still work. There's still revenue. Nothing like it used to be. Nothing to complain about. And it's imperative to remain humble and grateful. It is what it is. Anything that it produces is greater than employment revenue. So I literally haven't had a raise since 2020. And that means it's basically a 30% reduction in salary, inflation adjusted. As I work at a startup, it's a small company, and they all the nuances aside of when they're able to facilitate or we follow revenue as individual employees, and when it's possible, all right, great. It hasn't been possible. So, but considering that inflation adjusted salary reduction, quote unquote, this additional revenue is compensated to the point where, all right, it's still meaningful. I'm able to pay bills. So I remind folks, as I've done throughout this entire stream today, it's important to be grateful. It's important to be humble. Add those to your business rules. Max Profit, good morning. Good morning. Always a pleasure. 152 people on the stream. If you're on X or on YouTube, throw some questions or comments. Otherwise, we could keep it a relatively short and sweet stream today on a Friday. Bitcoin 53 below 54. So I get a kick out of it every time I look at this chart. This chart's insane. So what does this chart mean? Bitcoin's at a premium. Did you buy it at a premium? Did you buy it at $55,000? Because the average price is $39,000 from a weekly perspective. Premium. Don't buy things at a premium. Buy things at a discount. All the other complexities aside of what Bitcoin is, as it contributes to a portfolio, I define it as a cash equivalent, collateralizable cash equivalent. Um, that being said, this chart is insane. The fact that Bitcoin's this far deviated from the average price, considering what the hell's going on in markets, expresses the reality there's a significant interest, significant buy pressure. Even keep it up where it is, considering global liquidity conditions, dollar availability. The 100, 200 SMA cross on the weekly. This is the only time in Bitcoin history that the 100 came below the 200. And this is the longest drawdown, 700 and change days from a dollar FX perspective. And Bitcoin's still at 54. It's literally up 1534, 3.5x since 22, 350%, 2 years, give or take. Wow. So I could appreciate folks that are probably bidding it now and they're like, why is it not going up? It just goes down. Yeah, because it already went up from 15 chip up to 70 in 2 years. Insane appreciation. Over appreciation. How do you know it's over appreciation? Look how deviated from the mean it is. Look how above the 200 on the weekly and the 100 on the weekly for that matter. That's how volatile the asset is. But overall, this chart is insane. There is no other chart like this. And I'm not even talking about like short term technical analysis, which I don't really give a shit about nowadays. I'm literally just looking at a relatively high time frame structural analysis. What does this chart say? What is the story of this chart? And this chart says that's very interesting. Now, bear in mind, I would say the same thing if Bitcoin was at 40K. Bitcoin goes to 40K, and you have a fat wick through here to like 34. It closes the end of the month at 39, and then towards Q1 2025, you're at 48. Q2 2025, you punch and pass all time high. Doesn't that make sense? So, and I'm in the camp of quote unquote hodl, so to speak. Watch it play out. Drive yourself nuts over the price because folks try to make money trading. Like, I want to buy it at 45 and sell it at 55. Or if it's at 45 and maybe possibly it dips to 35, I should sell it now so I could buy it back cheaper. Drive yourself nuts. So I'm firmly like, if I wasn't as understanding of capital management as I am, be like a DCA kind of personality. Accumulate. Price goes down, price goes up. World keeps going on it. That's the reason Bitcoin is most interesting. It's a binary investment. If the world keeps going, the destination is up. The world ends, everything goes to zero, and Immortan Joe is elected president, in which case none of it matters. So the equation is strongly tilted towards accumulate, and the price doesn't mean shit. That's just a very high level, 10,000 foot view perspective on what literally drives people on social media mad on a daily basis. Is the price going down or up? It'll drive you nuts. There has to be a different way to think about capital management. That's the first and foremost thing everyone who ever hears me talk needs to do. If you have any drop of anxiety, any type of frustration or uncertainty, it's probably a different way to look at it. Probably a higher time frame that's more comforting. But it's real. It's not like anything I say is not literally the case. It's exactly the case. I have no idea what's going to play out tomorrow, but generally speaking, normalcy. We've talked about that a lot. If that's the continue, there's only one place this thing goes in the coming 10 years. Otherwise, Immortan Joe. Who's electing Immortan Joe with me? I don't want to. I don't want to do that. How would I want to do that? Uh, I- IndieWid. Good morning. Much a pleasure. Much a pleasure. Ethereum much worse off, albeit BTC marginally down today. So it's marginal. Doesn't really mean much. This is just significant underperformance across the board. Um, Curve is at a constructive level. You go into something like the daily, maybe even a little shorter. Yeah, but it's really this level that's interesting. It's very interesting. It would need yeah, trends continue until capitulation, and it requires breadth. Just like we talk about Nasdaq and S&P 500 or Nvidia, because that's literally what those indexes are. The number's not going up. That freaks people out. They're like, "Oh, what if it starts going down?" And then one person gets out, and if you get out first, you're not panicking. Margin call, and that starts the downtrend. Cycles will cycle. Things go up. Things come down. This is at least an expression of exhaustion at this price range. You think? You think after an insane percentage collapse in market cap, it's literally like $600 million we diluted market cap. What the fuck? So you would need lower lows, and there's your trend: higher lows, higher highs, lower lows, lower highs. I don't really see much of a lower lows, lower highs forming out of this. Um, Speculative statement, but it's a constructive statement because literally there's quite pronounced uh, peaks of volatility, and price action is still within this boundary. So at least it's constructive. 101,275 still got great volatility, but where are we on the 4 hour? Second retest of the is that the 100? I think it's the 100. Let me just check my color schema. Yes, the 100. So it's another retest of the 100. So it was rejected here uh, on Wednesday. We thought it was going to push. We thought it was going to push through. Let's see if it gets rejected a little bit more cleanly. 1014, 1014 and change. And then you get finally the lower high because this thing, maybe it's a double, triple, quadruple bottom from a 4 hour candle perspective. It's probably not a reasonable time frame, but maybe it's a double structural bottom, and it bounces off of the 100. But if it punches through, you have some nice confluence suggesting one continuation, two, this whole concept of structural change and capital flows out of the US and an emerging market capital rotation just gained a great deal of strength. Really need to get below there, 99.59. And then it's just then you have like arguably ultimate confluence because oh, look at that on the weekly, our current price point is 200, 200 SMA on the weekly. But that'd be a level. Levels, moving averages, trends. Those are the cascade of strength. We got to the monthly 98. So 98, all right. You get to that moving average, you're just below this low. But from a level perspective, these are your structural lows heading back years, heading back all the way to 2022. It'll be very, this tells the whole story between this and the move indicator, which literally just shot up to 114. But look at that wick. Look at that wick right through the 100 on the weekly. Wick, 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 wick. Suppressed, volatility suppression. At some point, we'll see this collapse. Once this collapses and the DXY rolls over, and good parts of Nasdaq roll over, and good parts of the S&P roll over, see the Dow Jones Industrial Average rally, and private equity, private capital start to pour into maybe domestic U.S. manufacturing. You'll see it in the headlines. You see it in the news. New mining facility, new car manufacturing plant, new. I don't know. I think that's my expectation. And just crypto markets will do what they always do when you reach, when you breach. I'll show you one last time, and we'll wrap it up for today. When you breach the bull market resistance level. Hello, bull market 2017. Hello, bull market 2020. Oh, I need a brush. Hello, bull market 2024-25. Oh, all right. Let's wrap it up. We got one question from Harshal. Hello, Cap. How are you, my friend? Um, how low the RAM price will go? No idea. I am planning taking an entry when September ends. I don't. I will never have answers to pricing. All I know is everything's on austerity mode. You're in 2019 season where the world is ending. All of this was a farce, and it's never going to be anything great again. So that's everyone has to stake their claim and make their picks and own their wins and losses. You know the phrase, own it. So I I would hope that it has staying power. I would hope that it's a protocol that's significant. I think that Velodrome and Aerodrome are expressing significance, and I think likewise, um, Arbitrum is a significant chain, and on that chain, the VE33 expression is Ramses. Albeit there's other protocols, VE protocols, Camelot, that are expressing greater strength. What does that mean from an opportunity standpoint? Got no clue. Can't own everything. So at some point, you got to choose. So you got to make rules to define how to choose. Can't own everything. You can't. Don't uh, don't diversify too much. Don't spread too thin. Don't go all in. Those are very classic historical rules. Position size is a critical one that helps you invalidate positions. Um, and then just start defining all the rules. I'm sure folks could come into the comments and reiterate some of the rules we've talked about over the years, and I'm sure on Discord as well. But that's the whole point: is look for things to invalidate reasons to take a position. That's probably one of the most useful rules that any of us could define. It should be the hardest thing in the world to take a position. Most rigorously thought out, excessive due diligence, timing more or less right. Great price, discount. Needs to be a discount. Clearly everything's at a discount right now. Um, and then we'll check back in 4 years and we all get to talk about, did we make good choices or did we not? That's hindsight. And we'll all have a conversation about hindsight. And the way we do our stream, where it's all commentary, a lot of people over the years that have heard these types of talks will come back in a couple, and I'll remind folks, we'll compare notes and we'll see if we make good choices or not. Fortunately, there's not too much to choose from that are core infrastructure, liquidity, foreign exchange, credit, derivatives. That's the only thing I see as the most significant value from a business standpoint in these markets. Foreign exchange, credit, and derivatives. 156 people made it to the end of the stream today. I appreciate each and every one of you because together we could be a little bit more rational. Take care of your friends and family, family first. I wish you all a wonderful day. Friday, September 6th at 12:32 p.m. Enjoy the weekend. See you on the flip side on a Monday. Peace.